And you know that sound. That means we're live here. Tackle Trading Halftime Report, Monday, 12/3/2018. And what a day so far, Matt. There's a lot going on out there in the market. Obviously, the G20 meeting over the weekend. We come in, market gaps open to the high side, backfilling a little bit. But first question, how you doing, brother?
Doing very well, Tim. Excited to be here with the crew and excited to be doing the halftime report today. A lot to cover, a lot of news.
I agree with that. There's always a lot to do. And that's a very clear W pattern, very noisy market the last couple of months, a lot of different opinions. Obviously, the market did like the initial response to what Trump and President Xi had agreed to over the weekend, Matt. From what I understand, they were putting some kind of like trial period where they weren't going to do anything extra or anything different. They were going to keep the 10% on the $200 billion in tariffs, but there was positive momentum. I know you did a deep dive on that analysis. Before we break down stocks here, give us your thoughts, your insight into that G20 meeting.
Well, a lot of he said, she said type actions, no doubt. But overall positive mentality coming out of that dinner date with President Trump and the Chinese delegation on Saturday night down in Argentina at the G20. And I don't think anybody, Tim, in the market or in economics or in politics, expected a deal to get done. There's so much that they have to discuss, right? So I think the best case scenario coming out of that dinner date was achieved coming out of it, and that was the delay in the 25% increase in tariffs coming in on January 1st of 2019. And so President Trump and the U.S. delegation agreed to not put additional tariffs on Chinese goods. On January 1st, they agreed to delay that until April 1st of 2019. So they're putting in a 90-day, kind of a lag period so that they can further discussions, further negotiations, and it gives them a little bit of opportunity to continue those trade discussions. Now, the question is, can China and the U.S. overcome their differences from a trade perspective in that 90-day window? And the news is positive coming out of both China and the U.S. as it will be. China's going to be talking, and obviously President Trump's going to be touting this as a major deal. But let's not put the cart before the horse. There is no deal here. This is simply a delay. Now, President Trump got what he wanted. China agreed to buy more agricultural goods, agreed to buy more industrial goods. But here's the problem, and here's the problem for the market, Tim. We don't know any parameters of that. We don't know what that means. We don't know what it means when Trump says China promised to buy more agricultural goods. Well, when, how many, and for what duration of time? How many more industrial goods? Okay, if you're going to buy our U.S. steel and our U.S. products, how much, for what duration of time, and so on and so forth. So there's no specifics, there's no parameters agreed to in any capacity. It is simply a delay that allows them to negotiate further. My read on this is short-term positive for the market, Tim, but longer term, I think in February we're going to be right back here. And the number one reason I think that is these trade deals aren't just about who buys what, Tim. Mm-hmm. That's not what this is about. The number one thing that if there's two things that the U.S. we want to reduce our deficit with China, right? Mm-hmm. And I believe Cody was giving me some numbers today. They ship to us 3 times more than we ship to them. So we want to reduce that. China doesn't want to reduce that, obviously, but we do. There's obviously room to negotiate there, okay, for both China and the U.S. But the bigger question for the U.S., in my estimation, is how China gets a hold of a lot of U.S. intellectual property, Tim. And that is a big negotiation that I don't know if there's going to have 90 days is going to overcome that. How does China get access to U.S. IP? Well, they buy U.S. companies. That's what they do. They merge with U.S. companies and they get U.S. intellectual property. And we want to stop that to some degree. So those are some big hurdles when you're talking about intellectual property and not just trade numbers. So to me, short-term positive reaction for the market, no doubt about that. Longer term, I think we're right back here in February saying, what's the parameters for the deal? April 1st is coming up really quickly. I'm sick of the volatility. Let's get some deals one way or the other. Everything that's been frustrating every trader for the last, better part of the last 2.5 months. I think we're going to be back here doing that again. But I do see it as a short-term bump for risk. The thirst for risk was alive and well today, Tim. You see it with Apple, you see it with Amazon, you see it with other currencies that are a little bit more risky than the dollar. So the thirst for risk is certainly back on in the short term. But I don't want to throw water on the parade for the bulls today. But you did gap up right into resistance, and you started selling off right into resistance. So that is a little bit of concern with the intraday activity. But overall, short term positive.
They call this risk on, which is where your money is going to go into more aggressive areas. One of the questions is, Matt, is a deal better for Chinese stocks or U.S. stocks? We're looking at the S&P 500. You and I were talking over the weekend. Is this an opportunity in Chinese stocks like Alibaba and Baidu and, all of those different types? FXI is the ETF for China, and you can notice that reversal pattern's a little bit better here. Still got a clear resistance that is true on the market at large. But what's your take on that?
If we do get a short-term bump, I think the Chinese tech companies and China in general would be the play here over U.S. markets. But if equities are going to rise because of the thirst for risk is back on, equities should rise both in China and the U.S. It's just that China has been undervalued versus their U.S. counterpart. We've talked about the VIPs last week. We talked about BABA last week. We talked about Tencent and JD.com and some of these other Chinese companies, how they've been really kind of hit with the tariff discussion in 2018. But it wasn't just the Chinese stocks, Tim. The Australian dollar, the New Zealand dollar, things that we've been looking at quite aggressively over the course of the last month. Both of those two are triggering more trades to the bull side today. So a lot to look at. There's no doubt about that. But in my estimation, the news that came out, if you take in all of the news last week, really neutral for the dollar, maybe a slightly bearish case economically for the dollar with a thirst for risk back on. Equities positive, dollar neutral, just maybe slightly bearish off the reaction. But overall positive for equities. I'll tell you one thing that's not buying this bullish mentality though, Tim. It's the bond market.
Yeah,
the inverted yield's going inverted.
I still have my hesitation because I'm a trader and I'm always skeptical of everything at all times. I'm always looking at all sides of it. I'm looking at the FXI here hitting resistance. Interesting opportunity. There's no doubt about it. Go back to the ES for a minute, Matt, until you clear that W pattern resistance. And really, there's key steps to reading a chart. Trend pattern levels. I mean, the trend is mixed at best.
It's neutral.
It's a neutral trend. You have 7 green candles in a row. It has a W pattern as clear as I've ever seen one, quite frankly.
It really is. I mean, if the number one formation I've seen was the M formation on the weekly chart in 2007, 2008, that was just clear as clear reversal pattern. It was textbook. This W formation is textbook too. A close above 2820, that's a buying signal.
If you're above 2820, you have to call the market bullish. Now, I'm not calling the market bullish yet. Some people would be buying this, clearing the moving averages and whatnot. Obviously, the market did buy into the news, gapped it open, hit the resistance. Now we've backfilled a little bit. Intraday, that pullback might actually be an opportunity for day trade.
It was interesting, watching and trading the futures market last night, Tim. With the market open, obviously the market was going to gap open this morning, and obviously the futures market was going to gap based on the news coming out on Saturday night. But what was interesting, Tim, is you gapped up right into 2,800, and you couldn't. You just started showing weakness at 2,820. It just utterly started showing weakness, and then the cash open is right here. And when the cash open, once you broke those intraday levels, as you can see right there. Once you broke those intraday levels, it just started showing a intraday bearish downtrend. Little bit of profit taking, Tim. A little bit of shorting that has been squeezed out of the market over the course of the last week and a half. But until it clears 2820, you're still in some slightly bullish to neutral.
And we've talked about the casinos, particularly Wynn casinos. Bring up WYNN, top gainer on the S&P here today. The international play and a risk-on play, you would assume, obviously a company like Wynn is going to look at very, very good. Yeah. That is a clear reversal breakout, up 10%, Matt. Definitely going on my watch list. It's been there for a long time. It was a bear stock for a while, but then we identified that reversal developing. Now you've got a breakout and you're clearing moving averages. Really interesting pattern there.
It's definitely confirmed. It's now back to being a slightly bullish trend. I don't know if you want to chase it if you're not already in it off the reversal, right? Mm-hmm. It's up 10%. I don't know if you want to chase it 10%. But definitely put it on a watch list. This is something could be interesting over the next month or so.
Yeah, I agree with that. AMD is second biggest gainer on the obviously the S&P here today, breaking out of that W pattern reversal. Now you still got a moving average, you got some other noise in there, but a beautiful reversal, very strong signal on AMD, Matt.
Mm-hmm. Yeah, we've talked to AMD quite a bit. It's been on a few reports in the last 2-3 weeks. I liked it with the break above 20. I like it with the break above 22, and I like it with the break above 24. So those are your triggers. If you're not already in it, 24 is the next hurdle to clear.
There's always winners and losers pretty much across every market. Activision Blizzard, Matt, we've been very, very bearish on the gaming companies. ATVI just absolutely taking it on the chin. We had this one on the reports. We identified it. Activision has been a very strong bearish chart for some time. Now you're actually pressing another support point. If you missed the trigger on Friday, and we broke this one down, and now you're looking at it now. Is there a new trigger below support at 46?
Yeah, of course there is. There's always an updated trigger. And that's the thing that people have to understand is that, especially like on today, Tim, where, the market gaps up, 1.52%, right? So the market gaps up 1.52%. Well, a lot of those triggers that we were looking at for bullish trades, they need to be updated, right? Because it probably gapped over a lot of those triggers, and now we have to update it. A lot of the triggers on the downside need to be updated. Take Facebook, for example. Facebook on the options report this past week, Tim, I actually liked, and this is something that we talked about in the scan report meeting, and we had a few of the halftime crew hang out with us for that marathon meeting on Friday, and Marie and Steven and James and some of the other participants, Jasmine and whatnot, they came and hung out with us in that scan report meeting. And how'd you guys enjoy that? James, Marie, Steven, did you guys have fun? Worth your time? So we had them come into them, we had a conversation that, on triggering, right? And when you're looking at something like this, and by the way, that was probably the best swing trading mentorship that those guys have ever had.
Probably.
That was a deep dive into swing trading, no doubt about that. But when you have something like this and it's rising coming into the potential trigger, you got to wait for it to slow down. And so when I'm looking at Facebook here today, I'm not in anything on Facebook. There's no doubt about that. But to me, I'm like, oh, now the trigger is actually easier to me on Facebook than it was even on Friday. So to me, a trigger, when you're updating your trigger, you're like, okay, I'm not going to wait for it to go all the way down underneath the low of 137.30. But now anything closes below 140, that's an updated trigger. Would you agree?
Of course. I mean, and you're going to have a lot of updated triggers on these bear retracements with the market popping up. It doesn't mean everything's bullish. I mean, you mentioned Facebook. I was looking at Netflix this morning. I actually think Netflix is a better setup now than it was on Friday because it hit 300 even.
I agree.
And that red candle, and now you have an updated trigger. I would have triggered below the candle on Friday if it just started selling, but now I have to look at it new, right?
Yeah. And that's the thing. On days like today, when you have gapping situations based on whatever the economic condition is, and you're primed and ready to go, and you're like, okay, now where do I do it? Where do I do it? Where do I do it? Well, to me, you got to update that trigger. Now, you could certainly short Facebook underneath the low. That's textbook, right? But to me, I'm like, okay, I got a clear level of support here at 290. Anything under 290 with the bounce off of 300, that's a solid trade.
Yeah, I agree with that. Before we go on to the NASDAQ though, let's go back to the Dow, if you would. I want to talk large caps for a minute. Obviously, it's been the strongest index that we've seen for a while, Matt. You're actually above the moving averages here. This gap out, I know we've got a clear resistance at 26,250, but the Dow has been very, very strong. I still have it rated number one. What about you?
Yeah, of course. I mean, it's definitely above everything, unlike the S&P and unlike the RUD and unlike the NASDAQ. You got to have it rated number one right now. And Tim, if it wasn't for the futures market, and if people just woke up today and they're like, oh, the Dow's up 1%, 234 points, they'd be like, oh, look at that. It's rising into the resistance level. You would take everything you're seeing today as a bullish. Obviously, with the Dow up, what was it intraday up? It was like up 500 points or something like that. Obviously a little bit of profit taking here today. Update your triggers on it, but the Dow is certainly number one.
And we'll get into the potential for downside risk when we talk NASDAQ here, but stay with the Dow for a minute, Matt. Top gainers, Nike, Boeing, Caterpillar, Apple, and DuPont. Also had a request from a new halftime crew member, David DeMaio, ask, what's your take on Tiffany? We'll get to Tiffany here in just 1 minute. Welcome, David. Good to have you. And welcome to the halftime crew. The Dow here, obviously very bullish, Matt. I'm looking across that internals, even with the backfilling, you have 21 companies going up, only 9 companies going down. The Dow's still up 1%.
You got the 9 companies?
Oh, the 9 decliners. Let me pull up a Finviz scan, actually.
I'm willing to bet some of those are
conservative companies. Yeah.
And that's the thing that's a little frustrating today. Obviously, we had some really good trades in some of those safe havens, like Procter and Gamble, and that just got blown through the water because now you have a thirst for risk back on. I think it's going to take a couple of days for this to sort out. I really do. I really do.
It does bring up a very good point that this is a market that you can learn a lot about sector rotation. When markets are shuffling the deck here, Matt, you have money moving into defensive sectors at times and then out of them into aggressive sectors at times. That's what they call a risk on, risk off type of light switch trade. Here are the 9 companies that are down on the Dow today: Verizon, Procter & Gamble, Coca-Cola, McDonald's,
every one of those,
Johnson & Johnson, Merck, Pfizer, and even
every
Disney.
Single one of those have been in really good bullish uptrends in the last 2 months.
Yeah. You're seeing a risk on attitude for sure.
So, I mean, take Coca-Cola, for example. Look what Coca-Cola's been doing, right? It's been doing great. Obviously down 2% today. Look at Procter & Gamble, right? Was doing absolutely fantastic, was approaching the breakout, coming back down here today. So, you know, what's happening in the market is you have a thirst for risk coming back on. Will that be sustained? Tim, we don't know that yet. Nobody knows that yet, right? For a Santa Claus rally to happen, you have to have money come back into the Amazons, Facebooks, Googles, Netflixes, you know, those types of companies. Would you agree?
Yeah. Okay. We're a long ways from that.
And we're seeing that initially, but until that market closes above resistance, like the S&P above 2820, we're not going to get it yet. Okay. So it looks like it's coming, right? Today it looks like it's coming, but let's show a little bit of patience and let this work itself out for the next few days. Tim, this is not our first rodeo here, right? We've seen these types of situations before. We've seen the mentality shift a lot in very, very quick time frames. So for me, it's a matter of, okay, be patient, update those triggers from the reports, and apply your trading plan the same way you would any other week. Don't chase the dragon.
Not our first rodeo, and do not chase the dragon. Although a rodeo with dragons would be interesting. I don't know.
That would be fantastic, actually.
Book. Yeah,
we got to make that happen.
Yeah,
like the cow that was on steroids last week. Did you see that?
I did see it. Well, I'm sure it was on steroids.
No. It wasn't just on steroids, Tim. It was fake. They made it up.
I'm sure. I thought it was a fake photo. The second I saw it, it looked like a fake photo. Yeah, I've seen some pretty big heifers in my day. Don't get me started.
Go up Payson Canyon, you'll see all the steroid cows you can ever dream of.
Yeah. All right, let's move on to the NASDAQ. Talk tech here for a minute, Matt. One of my favorite indexes to analyze and also trade. So many of the best names in the market are in tech. And this gap up is still actually very, very weak. You have the potential that this could be a shorting opportunity if you trigger back down. You're a long ways from that on the intraday. That would be pure speculation without confirmation at this point. But Matt, you gapped into falling moving averages. You still have a lower pivot low. In fact, very aggressive. You know, traders are selling on the top of this candle. What's your read on tech?
Don't overreact to it. That's my read on it.
Yeah.
Don't overreact to it. Look, take Apple, for example. Let's just look at Apple. And I know Apple's not necessarily a tech company, but it seems to be listed on literally every single exchange. Mm-hmm. Take Apple, for example. Okay. Apple, earlier today, Apple, what, up 4%? Mm-hmm. Right. In the headline, up 4%, showing a little bit of profit, up 1.8%. Okay. Is there anything in this price movement that says buy Apple today? Is there anything?
No, of course
not. Technical perspective that says go buy Apple today?
No, there's not.
So that's what I mean. It's going to take some time for this to shake out. That's what I mean. You're going to see some weakness at resistance. It's going to slow down. That's to be understood. Wait for resistance to be cleared, right? The trade barrier and the discussion Trump and the Chinese delegation had last Saturday, that cleared one hurdle for the marketplace. It's not the only hurdle for the market to get back to the 2017 bullish and the midsummer 2018 bullish. It's just one hurdle. We got, what, 12 Fed speeches this week? We got an unemployment report this week. We got 2 central bank announcements out of Canada and Australia this week. It's the same thing in every other capacity, Tim. Once one hurdle is removed, we just move on to the next one.
Well, that's the market. The market's an ongoing conversation that will never, ever stop, by the way. And today might be one of those buy the rumor, sell the news type of thing. The whole hype through the weekend about Trump and what the market's going to do. I actually was surprised it did not gap higher, Matt. I thought we could have gapped out of resistance potentially on this move.
That would take a lot, though.
Yeah, I know. I thought it could be in the cards now that we've gapped into resistance and now we're selling. I'm looking at the tech names, Matt, and I'm not seeing a lot of strength. In fact, out of the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google's probably the strongest, and Microsoft, but the other ones don't look very good.
Let's look at Google here. Okay.
It's got a clear resistance.
It's got to clear what? 1150?
Yeah.
Okay. But if it clears 1150, RSI is going to be at 85. It's going to be overvalued going into the breakout. You're not buying that. What you're going to, and that's what I mean by you got to give this time to shake out. Don't chase it. If it breaks out of 1150, it's going to be overvalued going into that breakout. What will happen is then it will slow down, retrace back down, and give you a better buying signal. So if Google is in fact retracing, I think you'll get a better trade signal in a week or 2 weeks from now than you would by chasing it above the 200-day moving average. And I think you're going to get a very similar price point.
Yeah, I agree with that.
Okay, so what's wrong with let it break the 1150, let it then retrace back down to the 200-day moving average, because people will take profit, Tim. They will. Okay, and then you buy it off a bounce off the 200. That is a much cleaner technical trigger on that one.
I agree. And if you look at all the different FANG stocks, Google, it needs to have some setup developing. You could make you could paint a picture for it. I actually think it's closer, and it's not even near it right now, but I think it's closer than the other ones.
Oh, it's much more closer than Apple.
Sure.
Much more. It's closer than Apple, it's closer than Facebook, and it's closer than Netflix if you're looking at the FANG stocks, right? But if you're looking at Google, you could see a scenario where in the next week it's a buying opportunity. Would you agree with that?
Yeah.
Okay. Amazon. You can see a scenario on Amazon in the next week and a half, correct?
Yeah.
Okay. You can't say that on Apple, Facebook, or Netflix.
No, you can't. No. So in fact, Netflix I'm bearish on, and Facebook I'm bearish on, and Apple
both Netflix and Facebook I'm looking to short. I typically don't short Apple, but I am looking to short both Facebook and Netflix on any trigger with a Facebook trigger under 140 and a Netflix trigger under 290. Both of those two are pretty good triggers.
Amazon looking pretty good, though. Google looking decent. They have those W patterns like the broad market does. The other ones do not. By the way, some of the stocks that are down the most today are those gaming stocks. We already looked at Activision, but Take-Two Interactive as well. TTWO down 8%. Gaming stocks are just taking it right on the chin. That is ugly. And it's a noisy chart. I do know that. It's a very hard chart to kind of interpret whatnot. But, Matt, they are just getting beat up recently.
Yeah, trigger under 100 would trigger again.
Yeah, I agree with that. Let's move on to the RTY, if you would. Let's talk small cap stocks.
Yeah, almost filled the gap, RTY.
W pattern, double bottom at the same location, found some support, but now you still have an ever so subtle lower pivot, low or high, I should say. The pivot from October was lower in late October, early November, and now here we are again, Matt. It hasn't confirmed a pivot, but still relatively weak.
Well, it's weak. It's not W. Look at the S&P. That's a W, right? When this leg comes right back up into that old resistance level, that's a W. This is more like an inverted cup and handle, right? Cup, handle, eventual breakdown. So we need time to let this shake out. I know people want to hear, oh, do this or do that. That's not our role. Our role is to analyze and do our daily routine. I'm going to analyze. I'm going to do my daily routine, and it simply tells me that don't chase. Give it a little bit of time to shake out. Update your triggers from the weekend scatter reports and execute your trading plan.
Yeah. Yeah, I'm going to try to stay balanced and build theta through the week as I respond to whatever these triggers are. I mean, that's my approach to markets in general. Right now, it's a very fascinating day in the market as we see this. By the way, the rut, if you did break, you have a lot of room to the upside. You know, out of all the different indexes, it does have clear air above that 200 period moving average.
Yeah,
Where,
it's got a lot of things before that happens.
oh, I do know that. That's
I think you
exactly.
could enter a bear call spread right now
I do as well.
on the road.
Yeah, I think you could leg into that side of it,
That's
at
a
least
cash
with
flow
a
condor
small
trigger.
position. Yeah.
Yeah.
Yeah. Condor, by the way, the Condors Mastermind Group is going to come out, I think, a week from Wednesday. So we'll be talking about the February trades and, looking at some of those cash
January,
flow
February
positions.
trades. Yeah.
Mhm. Yeah. You know, obviously stock markets, they moved up. You know, one of the things that I could not figure out what was going to happen was that currency market, Matt, and we were waiting on that. We were debating it. The dollar, and you and I, we had a long conversation yesterday about this before the futures market opened up. What will the dollar do? And Matt, the dollar is doing very little, actually. Very
Well,
muted response.
I had a very hard time analyzing the dollar on how the dollar would respond to this, Tim. You have okay, so, and this is why I struggled with it. Number one, if we do come to an agreement with China on trade, right? That's number one. If we do come to, and that's an if, but if we do come to an agreement, that should improve the economy, and an economy that improves, even if it's only 0.3% bump on GDP, it should improve. Dollar usually goes up in a increasing economic environment.
Mm-hmm.
Interest rates, however, last week, Jerome Powell indicated that they may not be 3 interest rate hikes in 2019, so that might be negative for the dollar. By the way, I don't believe Jay Powell. I do not believe what he said last week. I think he lied to the market, and I understand why he did. He played politics with Trump. Trump brought it into a political conversation over the last month and a half. Jay Powell responded in a political way to get him off his back. Trump loved it. Now he's off his back, and watch him raise 3 times next year anyways. So I don't believe it, but he did signal to the market he was willing to come off of that.
Mm-hmm.
Then you have this thirst for risk coming back in, though, and the dollar's a safe haven currency, right? It's like the Japanese yen, it's like the Swiss franc. So the Japanese yen is a safe haven currency for the Asian markets. The Swiss franc is a safe haven currency for the European markets, and the dollar is a safe haven for the Western markets. So you have this conflicted economic and fundamental viewpoint on how the dollar would respond to the agreement with no detail that we had on Saturday night. And I came to the conclusion that simply you have 3 potential trades here, okay, that I like. The first one is on the New Zealand dollar. So if I look at the New Zealand dollar here, and we're just going to look at the futures market here. That, and we've talked about this. It's been on the Forex report 3 out of the last 4 times. I don't know what Keith did on his Forex report this weekend, but breaking out of that 69 handle, that was a clear signal last night to get in. And remember what I talked about with Cody last week, Tim, right? On the Friday scan report. I said, Cody, wait for it to clear 68.90. And if you want to be more conservative, wait for it to clear 69. That was an easy trigger to get into. So, a long New Zealand dollar against whatever currency you want to look at, but that was one of them. The next one, and I want to look at this a little bit more closely here and talk about it because I think it's important, is the Australian dollar here. The Australian dollar is, and it's going to be a little bit more volatile than the New Zealand dollar right now because it's tied to that Chinese trade. And so with how much trade Australia does with China, they've been impacted a tremendous amount this year in the Australian markets, and specifically with the Australian dollar. If there is a trade deal between the US and China, the Australian dollar should benefit into that, okay? So that, to me, the New Zealand dollar, the Australian dollar, and then I was looking at, okay, if you're going to go long dollar there, look at the GBP/USD here, okay? To me, the trade, and I talked about it in the scouting report meeting as well, was maybe a short dollar against the Australian, against the New Zealand, one of those 2 pairs. You don't want to do them both. Couple that with a long dollar, short pound on a breakdown of 127. I think that's still the trade I'm looking at here is a short pound long dollar on a break of 127, New Zealand dollar already triggered. So that's what I'm looking at from a currency perspective. I think you're going to get mixed results on the dollar. I think the short-term scenario for the dollar is neutrality until we see a break one way or the other, and then we'll reassess it. So it's like we talked about when the stock market is a stock pickers market, that's when it goes neutrality, correct?
Mm-hmm.
When any market goes neutrality, it becomes a stock pickers market. Well, in the currency market, when the dollar's flat and neutral, it becomes a currency pickers market. And so when I'm picking currencies, I'm looking at, okay, New Zealand dollar, Australian dollar, very strong right now. British pound, especially with a break of 127, very, very weak right now. But I think it's going to be mixed for the dollar.
Yeah, mixed until otherwise noted. I'm looking at the economic calendar for the week, Matt, over at Forex Factory. You know, one of the calendars I do like is there. And I see Fed testimony all over the place, like you had mentioned. That can affect the dollar. The actual unemployment report this Friday is always a red, letter event, something that can impact currency markets as well. Fed Chair Powell is giving more testimony on Thursday. There's a lot for currency markets this week. And this whole thing with the G20, now that we moved out of it, maybe we can get some currency picks out there that are directional and not sensitive to that news since we're past a little bit. Any of these things stand out to you?
Yeah, just the gluttony of Fed speeches this week stands out to me.
Yeah.
I mean, what are they trying to do here?
Maybe we should make that Fed movie like we were going to do, and you had that idea years ago.
I didn't have an idea. I had a dream. I had a little catnap one day and had an hour-long dream of I was a movie producer and I made the movie called The Fed, and I was in casting and I was casting the roles of the Fed. And then I woke up and I called Tim and I'm like, I got a blog about this. And I wrote a blog over there at Tackle Train. This is like 3 years ago. It was back when Janet Yellen, Betty White actually was in my dream, and she was playing Janet Yellen as the Fed chairperson. I had some good casting in that. That was going to be a really good movie. I promise you it'd be better than whatever the Hollywood junk they make about the Fed is. But the Fed's coming out here in force this week with about 11, 12, 13 speeches, no doubt. One key point, though, Jerome Powell's speech on Wednesday in front of the Senate Finance Committee, that is now canceled as we are honoring the late, great George Herbert Walker Bush, who passed away over the weekend.
Yeah, we were talking about him just recently, in our podcast and whatnot. What an incredible American, and definitely American. A salute to what president number was he? 41. 41. To President number 41, obviously George H.W.
I was always a big fan of old Granddaddy Bush. He was an amazing man, truly an amazing man. Shot down in World War II, pulled out of the submarine, later became the leader of the CIA, vice president of the United States in the 1980s under Ronald Reagan, president of the U.S. In 1988 to 1992. Had a 70% approval rating in 1991 during Gulf War I. Economy falters in 1992. Ross Perot, emergence of Bill Clinton. Many factors led to his demise in the 1992 presidential elections. No new taxes, certainly is a famous saying, but a philanthropist and an amazing individual.
Absolutely. No doubt about it. One thing that I was noticing, and by the way, we're going to move on to the oil markets here soon. The dollar CAD pair is very volatile today, but also oil is very volatile today. And I saw that Canada was going to cut some of their production.
Before you go into oil, one thing about Australia, don't touch the Australian dollar before tonight. Australia is reporting, central bank, the Royal Bank of Australia is reporting interest rates. So there's no trade on Australia until we see that tonight.
Mm-hmm. Yeah. Let's talk oil for a minute because it has found some support at the $50 barrel mark, Matt. Obviously, a risk-on type environment today. You're going to get a bounce in commodities. But I talked about this in the commodity report. Any bounce is just a new entry point, Bearish trade, bearish setup, bearish trend. I'm not in a position yet, but I'm watching for this rally as a potential entry point to the downside if you break back down.
If you break under 52, that's a shortable signal. If you close, and I'm talking intraday on the 52. Mm-hmm. If you close under 50, that's a shortable signal. Tim, I don't care that crude's up 3% today. Okay, that does not matter to me. We've seen this before. Oh, crude's up 3%. A 3% movement off $50 is not the same as a 3% movement off 75. Okay, that's just math. But I don't care that crude's up. Crude's coming right into that trend line we've talked about. That to me is showing weakness. Now the question is, why is crude up? Crude is up for a couple reasons. Number one, okay, G20 summit. Did you see the handshake and the high five between MBS and Putin?
I did not. No.
Oh, it's so fantastic. Oh, man. It looks like they're a bunch of 22-year-olds doing some type of fancy handshake. Oh, they were ecstatic. They might as well have been hugging and making out. And I mean, they were just loving each other. And they agreed during the G20 summit hearings to renew their oil cuts that they agreed to in 2017. That's one reason. But the bigger reason is this Thursday, OPEC is meeting, okay, and they're meeting in Vienna. And it is widely expected that they have a consensus for OPEC to cut oil, okay, to cut production in the oil market. Now, the question is, once again, much like President Trump and President Xi out of China did not give us specific parameters on that agreement or lack thereof, neither did Putin and MBS. They said, we're going to renew. It's great. It's amazing. But we don't know how many cuts, how long will it last, and what are the parameters for it, right? So a lot of hearsay coming out of the market today, both in terms of the G20. Not a lot of substance, guys. A lot of hearsay. There's a difference in those two things. But the OPEC, there does seem to be a consensus on a cut. We don't know the depth of it. And what the biggest question is, will those cuts offset the obvious lack of demand and increasing supply in the oil market? I'm not sure it can. I think oil can puncture 50. But let's OPEC this Thursday is very important.
Yeah, there's no doubt about it. Obviously downtrend pressure, you've got support at 50. If it breaks below 50, that's a trigger. Here below that 52 level on an intraday, there's a trigger. Oil's not out of the woods, Matt. And I did just look up.
Let me put it like this. I had one of my students, we were on the phone last night, and he asked me a question. He says, Matt, I'm thinking about buying USO right now. It's undervalued. So I can do some good cover calls now. I'm getting like 3.5% cover calls on USO. I said, would you rather have me kick you in the face? That was my response.
Yeah.
Which one would you rather have? Because they're both going to feel bad.
Well, I don't want to get kicked in the face, Matt.
No, of course not. My point was they're both going to hurt. Okay. That was my point. Let it, I mean, my God, let it settle down. What are we doing here, right? Yeah. The market's up one day, okay? Oil's up one day. Let's let this thing set up. Let's not chase it. Let's not be, overreaction here. Let's let it establish a significant trend and pattern, and let's get back to trading technicals here, okay? Because a lot of what's happening right now is hearsay, opinion, that lacks complete substance. Trump came out and said the greatest deal of all time between him and China, the greatest deal of all time. And I'm like, what's the deal? What's this deal? So again, give him credit, because I think this is the best case scenario that could have happened out of the G20 dinner date between Trump and Xi. So give him credit. But we still have a long way to go to get out of this from a technical perspective. Yeah, there's going to be great if there is a deal to be made. There is going to be wonderful trading opportunities over the next couple months. Mm-hmm. It doesn't have to happen the first day after an overreaction.
No, of course. And obviously there's still more to shake out coming out of the G20 meeting, where everybody in the world is saying, we're going to cut production. We're going to do this and that. Canada comes out and says they're going to cut production. I would have expected oil to jump even more than this. Positive news through the weekend, gap up, don't overreact, read the technicals, be
10
patient.
Straight weeks of missing that EIA number on the supply side.
Yeah.
Cuts aren't going to just stop that.
No, they are not. No, they are not.
You got to have demand. Mm-hmm. Without demand, cuts don't just increase demand. They decrease supply. You got to see demand come into this.
Very good. Move on to NG if you would. NG actually pulling back. These are inverted recently, which is really interesting. It's not always been historically inverted, but in this market right now, crude goes up, NG comes down, it seems. NG goes up, crude goes down. Right now, you're pulling back. It needs to settle in here, Matt. We know that. We've been
It's a little
talking
warm
about.
today.
Is that what it is?
It's a little warm today.
I don't know. It's 30 degrees here in Utah. So,
That's the best analysis.
Feels fantastic out here.
It's warm in Hawaii, Cody says. Thanks for that update, Cody. It's paradise in Hawaii, right?
Hey, the news weather anchors have no issues out here.
No, they don't. Enjoy that hurricane next year, though.
Well, no, I'm sure that.
But my point on natural gas, though, is, Tim, it doesn't make a lot of sense. The last month in natural gas really doesn't.
Mm-hmm.
So it's so hard to trade. And in that same conversation I had with my student on crude oil, I said, listen, there's going to be a moment in the very near future where crude and natural gas, and I was talking about USO and UNG, are both very, very viable to put back in that portfolio, back in that plan to do covered calls on, right?
Yeah. Yeah.
But I said to him, wait for the volatility to subside in both of them. And he's like, well, how can I tell when that happens? And I said, quote, when you're not getting 7% on a covered call on UNG, that's when you know. Okay.
Yeah.
Give me a boring 3%, and then we're go time. Then we're go. And I know that sounds weird, but he's like, yeah, I get that. So I'd like them both, but I don't like them both right now.
I like commodities in general. They're always on, my list. I like trading the commodity market. Crude. It's not that I want crude oil to go up or down. You can't care about that kind of thing. UNG, I'm interested in the bullish activity over the last couple of months. The pullback here today, you're down 7%. So you can't just come in and buy this red candle. But we knew it needed to settle into these moving averages, Matt. Over the next week or so, I think UNG will be an opportunity. I don't know exactly what that's going to have to look like. We're going to update it day over day over day over day, but it's a developing uptrend in the making as we're heading into this. And I don't know. Are we going to have to check the weather every day now to trade UNG? Is that what?
It's just silly. Obviously I was joking on the weather comment.
Yeah.
But no, it's you got to let it simmer down. Just let it, hold the horses here. UNG is going to be viable. We'll talk about it when it is. But at this point, for me anyways, I'm too old to love that volatility in UNG.
Yeah. Move on to gold. Gold bouncing about 1% today. Dollar weakness, gold rally. They have an inverse relationship over the history of their, time. And I love a breakout here at 1240. I've said it for a long time. We're pressing that, Matt. I don't expect that today. Gold is not that kind of performer where it just runs after, market's already been open for 4 hours and you've had the international reaction to this whole G20 thing. But a break at 1240 is tradable for me. Leap covered calls, like we talked about the poor boys on Friday, could be viable. Intraday, it's got a nice little pullback here. Gold, what you take?
You got to if you're day trading, a little doji pivot back up above 1238 would be a trigger to the upside. Swing trading, a close above 40 cents. You could buy that tomorrow.
Mm-hmm.
Now, whether it does it or not, we only got 2 hours, 45 minutes left in the trading day.
Yeah, usually by the time you get to midday, there's a reason why we do the halftime report at this point. You've got some unwinding, some management, some hedging, some adjusting, some updating triggers, but it's not like you're going to be chasing stuff into the close here. And that's why I like analyzing it when we do.
A close above 1240 though. I think for both you and I, a close above 1240 would be a trigger, no doubt.
Yeah, I've been talking about it for a while, and I like gold over some of the other metals personally, because I think it just represents a better safe haven. But silver is up 2% today. It's outperforming gold 2-1 on a percentage basis. All the metals are going up here today. Copper, platinum, they're pretty much all rallying on the back of this news. Silver still's got to break 15 for me from a long-term perspective.
Nothing to see there.
Nothing to see. Kind of still neutral.
Palladium, potential breakout of palladium.
Yep.
I've liked palladium a little bit more than you, but you got to respect that breakout on palladium.
Yep.
Platinum, that trade got blown out of the water 2 weeks ago.
Mm-hmm.
There's no trade there on platinum.
Yeah, and we are at the fourth quarter mark of the halftime report. And by the way, every Monday, and we actually have a design to the way that we do our week, Matt. We have Monday, Tuesday, Wednesday, Thursday, and Friday kind of planned.
Yeah,
We're developing some structure to the way that we're doing this show every day. And Monday, we do a deep dive into the sectors, and we kind of do a thorough market analysis on all the different components of the market to set up the week and talk about what's happening and what to expect. We already did look at the economic calendar, a lot of Fed testimony, and then that unemployment report this weekend. But bring up that tackle newsletter if you would. And by the way, Cody, you did a great job with this one over the weekend. And Cody has been, pitching in. And as somebody who we have a lot of faith and expectation for, Cody, how have you felt coming in and creating some of that newsletter in the last few weeks?
Oh, I love it. It keeps me on top of my own analysis, doing the top down. Not to mention, it's very similar to what I do every morning for you guys for this halftime report, but just doing it a little bit more broadly for the entire market. What are we looking at this entire week to come? Mm-hmm. And just kind of put some perspective into that setup. And with G20 and all of the stuff that's going on, like, it was a really fun report to do this weekend.
Yeah. Mm-hmm. And when we analyze the sectors, Matt, and we come up with these ratings, it's usually Friday afternoon in that scouting report meeting, and we give them a yard marker rating based on the current trend and the expectations for the coming week and what's going on with it. We have been more bullish on the defensive names like staples, utilities, healthcare, real estate, so on and so forth. Neutral on a few of them like financials, industrials, and discretionaries. That includes some retail names because of the weakness we've seen there on the brick and mortar stuff. And Matt, we've been more bearish on energy and tech and all that kind of stuff. Let's go through each sector one at a time, but kind of explain that yard marker system that we use, if you would.
Very simple. We're tackle trading. We're obviously sports themed. Yes, we're football fans. Okay. But basically what we have here is we put our scale that we do and from a bullish to a bearish perspective, it goes from +1 to -3, +3 to -3. So the more to the right you get, the more bullish you are, the more left the more bearish you are. And basically anything between the 0 and 20, the red zones, those are your bullish and your bearish picks, right? Those are you want to get aggressive with those. Those are speculative type situations that have good probability. When you're in that slightly bearish to slightly bullish category, the 20 to the 40 yard line, those are okay, we like it, but it might need to set up a little bit more. But we definitely like it. Maybe you don't go aggressive. Maybe you do something like a spread or something along those lines. Neutral means we're neutral on it right now, but we're waiting for something to happen, right? And that could be and is something that is overextend to the downside. We expect it to pop back up before it comes back down, or that could be neutrality that we're waiting for a breakout situation to happen. And for the past month or so, we've definitely been on the more conservative defensive bullish picks. We've had energy and tech in that bearish situation as well. Obviously, those things will be updated if we do see some sector rotation come back in. So those conservative plays will certainly be caught a little bit today. But that's kind of what we do. And then as you see the arrow, this means where we're moving it from last week's report. So, for example, we upgraded basic materials, we upgraded the S&P 500, we upgraded energy. And all of these upgrades that we were doing was before the G20 because we do them on Friday. And obviously, we don't know exactly what President Trump and Xi is going to agree to there. So, and they'll be updated, this Friday as well, based on what we see over the week. So that's kind of what that represents. Now, what I want to do, Tim, is I just want to quickly look at these from a technical perspective. And I'm going to look at the defensive ones first, because that's kind of where we're seeing rotation come out of, and if that rotation is impacting their trends at all. So here's utilities here on the scoreboard. I believe we had utilities ranked in the +30 capacity. I also believe we had 3 utilities stocks on the bullish stock and options reports this week. This, to me, I like this sector. Okay, I like the breakout and I like the continuation today. I would actually personally upgrade that utility sector based on what I'm seeing here today. So not a lot of money coming out of utilities. Actually, we're seeing that price continue to go up.
Let me give you some stats. I've got some interesting stats on this. 93% of companies that are in the S&P 500 that are in the utility sector are above the 200-day moving average for their chart. And 100%. are above the 5-day moving average. So they're all moving up right now.
No, and there's some really good setups this week. You take a couple of them. Look at AEE here, right? Amarin, nice little trigger above the little breakout channel there at 69, like that one. Duke Energy is one that caught my eye as well a couple weeks back. This is a continuation, looking for a potential break there on Duke Energy. So utilities doing pretty good right now. It's a sector that, obviously pays one of the most healthy dividends to long-term investors. It's a safe haven sector as well. And a lot of those stocks, when times go crazy and gets uncertain, utility stocks are one of those best performing sectors. So keep an eye on utilities. Looking at the next defensive sector was consumer staples here, Tim. And we had consumer staples last week. We had consumer staples, I believe, on the 10-yard line, 10 or 15-yard line. I can't remember. We downgraded consumer staples last week simply because it was approaching resistance and we wanted to see it break out first. So as this is going up, you're approaching those resistance levels, and that's going to give us a little bit of concern there in that capacity. So we did downgrade it, but I still believe it's one of the more bullish sectors out there. The next sector we want to look at is healthcare. Healthcare, another defensive sector, although healthcare can perform a little aggressive. Now, we did upgrade healthcare because of what was happening over the course of the last week here. Really good price movement coming back into healthcare. Don't get too caught up in what's happening today. That is the market just stalling at a very important resistance level at 96. A close above 96 is confirmation on healthcare. The next one you want to look at from a let's see, where's our real estate, XLRE here. So XLRE and real estate has been doing really, really good over the course of the last couple months. You've seen a very consistent trend here develop, and now we're just coming back up into that resistance level of 34. So it's going to be, it goes without saying, it slows down at resistance. Wait for it to slow down. A close above 34 is another potential trigger on real estate. On the aggressive sectors here, Tim, and these are the ones that we might see rotation come into. So keep an eye on that. Consumer discretionary, Tim, this looks like the Dow. That's what it is. We talked about it last week. It performs very similar to what the market does. So if the S&P closes above 2820, discretionary is going to go up. That's kind of how it works. The next one here, technology. We looked at the NASDAQ earlier. Anything underneath the 200-day moving average is just noise to me. Okay, so yes, it's up 1.81%. It's doing good. Great. Chase it if you want. I'm going to be patient. I'm going to let it clear out of resistance first. So the gap up today certainly changed the bias a little bit, but it's still bearish until it sets higher highs, right? So let technology shake out a little bit. Industrial, Trump, when is China buying our industrial goods? We need to see that. But outside of that, you got to like the price movement. I talked about this symmetrical triangle last week, how it broke out of that. That got a little bit more bullish for me. So in that scouting report meeting, I was probably a little bit more bullish than the rest of the coaches on industrials, just simply because I kind of believed in this breakout of the symmetrical triangle. But now when you're looking at the price movement today, you can't touch it until it clears 75. So keep an eye on 75 on the industrials. Financials, which is typically a defensive sector, but it's performed more aggressive over the last couple decades. Same thing that you're seeing in industrials. Broke out a symmetrical triangle, now approaching a very important resistance is 27.5. So watch how this performs at 27.5, and then ultimately the 200-day moving average here. But you got to like that breakout on the buy side on financials out of that symmetrical triangle. You just can't touch it until it clears resistance on that one. Energy, to me, if people want to pick up energy, you're asking to lose money. So to me, that's still bearish. You are starting to see slowing momentum. I want to see a better trend develop on that one. And then you have the communication sector, which I still think is extremely bearish in the communication sector, especially with the likes of like Facebook and whatnot. But you are starting to see some rotation over with like Google, right? So keep an eye on that one. But to me, a trigger back under 45 would, perhaps be a shortable signal there. And then basic materials, very similar to what's happening in financial. amazingly, breaking out of a symmetrical triangle today. Keep an eye on that 56 handle. A close above 56, you should see price appreciation back up into 57.
Love the analysis. Obviously, deep diving through the markets. One day is not going to affect our yard marker completely. Today's action is going to update that a little bit as we go through the week. We'll keep talking about it if anything's happening there. There's a lot of interesting activity. I still am more interested on the bull side for some of the defensive names. Staples Healthcare, they really stand out. Utilities looks really good here today as well. And, there's nothing about today's action that's going to shake me completely off that opinion. The aggressive ones, especially the communication sector and the discretionary sector, there's a lot of those retail names, and we broke them down on Wednesday, Thursday last week, that are just flat ugly. I mean, their charts are bearish and they've set up in bear retracements. We're going to continue to update throughout the week. A few companies have earnings this week, Matt, that are of note. Lululemon, Ulta. In fact, I'm looking at our prep notes here. Let's see here. Tuesday, AutoZone, Dollar General, Hewlett Packard, and Toll Brothers. Wednesday, American Eagle and Lulu. Thursday, you've got Broadcom and Kroger and Ulta. So a couple of companies. We're not in earnings season, so you're not going to get a lot of activity there. But definitely,
none of those companies are market drivers. Obviously, if you're an investor there, look to add protection, and there could be some earnings trades there, but they're not market drivers.
Yeah. All right, brother. What do we got going on in tackle trading this week?
A couple things. I just want to read this little song that Coach Christian over there at Tackle Trading sent me on Slack when we were talking about the reaction to the G20. And we were just chatting back and forth, and he said, Matt, it reminds me of the Traveling Wilbury song. And he said, handle with care, reputations changeable, situations tolerable, baby, you're adorable, handle me with care. And that was his response to the Trump and President Xi dinner date on Saturday. I love that. And if you haven't read my G20 special report, here's the link. I'll put it there into the chat as well, so that you guys can definitely go read that. I also posted a video there on YouTube that you can like on YouTube and share if you want. If other people want to see how the market's going to respond to the G20 this week in the market, this weekend at Tackle Trading, Tim. Tonight is the standard Monday night tackle trading onboarding session. And so if you guys are new to tackle trading as a pro member and you want to get access to learn all how to use our website, our weekly calendar, go over there with Coach Frank in the Monday onboarding, and that would be right there. You can see that link right there if you're a pro member. We have the Coaches Show tomorrow night. We have the Tackle 25 Mastermind Group on Wednesday night. We have Thursday night with the Cash Flow Club. And then as we go through every week, we have the Traders Lounge. It used to be called the Coaches Lounge, now called the Traders Lounge. That happens Monday through Friday at 11 a.m. Eastern Standard Time every single day. And that's where you can go get your answers to your questions and help with anything you need. And Coach Gino, Coach Mark, Coach Frank, Coach Noah, they're all over there almost every single day. I believe Mark was there today. And then on the weekend, we have our scanner reports in the newsletter.
I love it. As I'm looking throughout the week, obviously you want to schedule your day and your week around some of these events, and great report on the G20, Matt. I know a lot of students, I got quite a bit of feedback from many of our pro members saying, hey, Matt did a great job on that. So awesome job. Glad that you could get that together. And Cody had a really good question, Matt, and I want to get your take on this. When do you start decorating for Christmas? And by the way, I still say Merry Christmas.
I'm upset with Christmas.
I heard you're
upset with Christmas.
Why?
Because I am so sick and tired of how Christmas has turned into a consumer-driven holiday where it only represents greed, which is anti-Christian.
Matt,
that's why.
You have free will. You don't have to buy all that stuff.
Nonsense. My wife is the biggest consumer in the world.
But what have you put up a Christmas tree? Yeah. Two Christmas trees.
Two.
Okay. You got one in the office. All right.
I have a Christmas tree in my office.
And so you have already started decorating for Christmas. You might act like you're ranting against Christmas, but I see the Christmas tree in the office. I'm sure there will be presents under that tree at some point.
There's already presents under the tree.
Do you put lights up?
There's already lights up. There's already two Christmas trees. I think my house felt like Santa had already came here 3 weeks ago. It's driving me nuts.
Yeah. Don't be a bah humbug. Don't be a
I was
Grinch.
gonna say, is he more of a Grinch or a Stooge?
Oh, I've been called that a few times around my household the last couple weeks. But I do not believe Christmas holiday season should start before the end of Thanksgiving. So for me, I think post December 1st is a good number.
We
Right?
do it at the same time every year. The weekend after Thanksgiving, we have a big thing where we pull the tree out of the basement. We put it
Yeah, that's
together.
us too.
Yeah, and we kind of everything. Yeah,
But
kind of a
unfortunately,
family
my
event.
daughter loves Christmas, and she started decorating November 1st. So
Yeah,
yeah, no, I'd love Christmas. I get so excited to wake up on Christmas morning and hang out with the family, and do Christmas Eve, and I love Christmas. I just like to make fun of consumers who drive me nuts.
the only thing I would love to see this Christmas, and this will sound a little bah humbugish as well, is that every parent out there, and I will start a petition if we all can agree to this. Can we stop buying these stupid LOL dolls? Do you know what they are?
Oh my Lord!
Of course, you know what they are.
Oh,
They're driving me crazy.
are
If
they
you
the
have
ones
daughters,
that
you know
pop?
exactly what I'm talking about.
Mm.
They pop open, and they are everywhere in my house. It's driving me nuts.
Between the LOL dolls and slime, whoever made up slime needs to be in prison.
Is it? Well,
prison
seems
prison.
All right, guys.
Incarcerated.
Thanks for joining us, Halftime Crew. You guys are awesome. We'll see you back here same time, same station tomorrow.
Love you guys.
Peace.